Hey now, I'm back with an exclusive, complete trading system that dominates strong trends with ease. And after I test it for 100 consecutive trades, I will provide you with my remarkably popular optimization tips. Just be sure to carefully hit that subscribe button. I call this system the VuMan cross, and like most trading systems, it can be adapted to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy uses 3 free TradingView indicators. As always, links and settings to all indicators are listed in the description below. The first indicator is an exponential moving average. I am going to set the length at 200 and color it in white. Moving averages compute previous price data in an attempt to forecast future price movement. In this system, the 200 EMA will aid in determining overall trend direction. The second free TradingView indicator is another exponential moving average. This EMA length will be set to 50 and colored in orange. The 50 and 200 EMAs will work together to determine overall trend direction. The third study is the VuManChu swing free indicator. The swing period will be configured at 20 and the swing multiplier is set to 3.5. This indicator is similar to the QQE's volatility filter and applies the formulas directly to the price rather than to the smoothed RSI. In the VuMan cross, this indicator will provide our entry triggers. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar, 1 hour Japanese candlesticks. The rules to enter along on the VuManChu cross are: first, we are looking for a golden cross. A golden cross happens when the 50 exponential moving average crosses above the 200 exponential moving average. This event is an indication that an instrument is entering a bullish phase. Once we see a golden cross, we can take any buy signal on the VuManChu swing free as long as the 50 EMA remains above the 200 EMA. Our rules are met when this candle closes. That is our trigger candle. The stop is placed at the 200 EMA line in white and target is 3 times risk. And this setup hits the target. If you enjoy this content, make sure to click that like button. I have one more long example. Here we can see that the 50 EMA crossed above the 200 EMA. So if we missed this signal, the next signal is still valid as long as the 50 EMA is still over the 200 EMA. The entry criteria is met on this trigger candle. The stop is placed at the 200 EMA in white and the target is 1 to 3. And after a while, this one finally hits the target. Now we flip to shorts. This is what I will test for shorts. First, we are looking for a death cross. A death cross happens when the 50 EMA crosses below the 200 EMA. When the death cross happens, it can indicate a change in the overall trend direction to the downside. After the death cross, you can take any sell signal on the VuManChu swing free, like this one. When that candle closes, it becomes our trigger. The stop is placed at the 200 exponential moving average in white and our target is 1 to 3. And this example hits the target. I am going to show you one more quick short example. The 200 EMA is above the 50 EMA. We have a VuManChu swing free sell signal. This is our trigger candle. The stop is placed at the 200 EMA and the target is 1 to 3. And the final example hits the target. I am going to give you some excellent ideas on how we can improve this system along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit the like button. Remember, this is just 100 tests. If you are thinking of using this system, do all the required testing and be sure to let our community know what you discover. This test was done on Bitcoin versus the US dollar, 1 hour candles. It took just over a year and a half to find the 100 setups. This dataset provided for 13 consecutive wins compared to only 7 successive losses. More on that in a moment. The win rate turned out to be 44%, which is truly wonderful for a 1 to 3 profit target. Risking 2% per position, the total gross gain on account was 138%. And make sure to stay tuned for my 6 optimization tips to make this strategy much more versatile. So the equity curve was dropped down from the heavens and put right into that trading account. We get this consolidating period to start, followed by a Saturn V rocket to the moon. If we look at all the trades taken on the daily time frame, you can see why this account got so fat so fast. These impulsive moves on the higher time frames created even relatively larger motive moves on the lower time frame. What if the instrument was not so impulsive for the test? What if instead of ending the test 2 days before this video was released, we used this dataset previous to that? Do you think the results would be the same? What score would you give this strategy? Let me know in the comments below. I gave this system a Trader's Landing score of 7 because clearly this strategy works wonderfully in a strong trending market and consistently gets you into ongoing trends. However, this system potentially lacks the filters to limit your drawdowns during consolidating periods. So much more testing is needed for sure. Remember, the enemy of great is good. I have 6 ideas on how we can improve this system. One way to filter out bad trades in a trend following system is to use king market structure. On this chart, we can see 3 losing trades, 2 of which could have been avoided if you do not take bearish signals that are not in sequence below each other. Second, like I showed in this video, using hidden divergence is a great technique to add into a trend following system. You can see a lower low on the RSI and a higher low on price. That is hidden bullish divergence and can portend another bullish leg up. In addition, you can see this entry does not have hidden divergence and is a loser. Third, circling back to point 1 in terms of king market structure and incorporating the golden and death crosses, if you zoom out on the chart and see a bunch of higher highs with golden crosses, these in and of themselves can be valid entries for swing trades. And conversely, if market structure is showing you a bearish picture, then you can look for entries at death crosses. Fourth, when you are doing your own backtesting, you should be developing your market awareness. It is by far the most valuable single thing you can take away from manual backtesting, and the only way to enhance your God-given abilities to read a chart. An experienced trader would look at this chart and say that 1. The stop will be too far away from the entry. 2. The gap between the 50 and 200 EMAs are too wide and consolidation is coming. And 3, I will wait for another signal after this zone is broken. You can only have confidence to act on these market developments when you put the work in on the charts. The 5th tip is another entry method. This is more of a classical method for trend entries. On the chart, we have a clear downtrend as demonstrated by the distance between the 50 and 200 EMAs. And then we have 3 clear breaks above the 50 exponential moving average in orange, and price closing below the 50 EMA. These are fantastic bearish signals for a very traditional entry added on top of a traditional trend following strategy. So if you have watched this far, I suspect you are waiting for the hidden optimization, and you also know my fascination with volume. So look at this death cross with that huge increase in volume. There are things in this life that are no coincidence. Check out this playlist for more profitable systems, and have a great day, because you deserve it.